As the chip shortage eases, new problems arise for Japanese automakers as we get further into 2023. Over at Nikkei Asia, Honda, Mazda on bumpy path to profit recovery amid chip crunch, but it's not just them. All the Japanese automakers for many different reasons, but profitability is going to be tough here in 2023 for them, let alone the EV landscape continuing to shift as most of the Japanese automakers are still slow to react. For better or for worse, only time will tell. And before we get into it, if you appreciate these industry auto news updates, make sure to hit the like button. It helps me out, as well as subscribe so you don't miss any upcoming news updates coming out of Japan, especially for the Japanese automakers. With the Japanese yen recovering, profitability is sinking for these automakers, and chip shortages are still continuing to shackle operations. Scrolling down to the Q3 net profit here. Toyota's net profit, even though it is still much higher than its rivals, it is shrinking. It is down about 8% compared to 2021 Q3. But when you put the full year into perspective, it looks like their net profit outlook is going to be down about 17% compared to the previous year. And outside of Toyota, even though Honda, Subaru, Suzuki, etc. are posting positive profit results for Q3 2022, it is not going to stay that rosy as we head into 2023. And Mazda seems to be adapting quite well. Masahiro Moro said the company is able to use chips that are available in the market by changing designs and acquiring parts that can be used for its vehicles, but the procurement of chips still remains challenging. And I'm sure all these automakers to some extent are doing that, reworking their vehicles, reworking their software in order to work with available parts. We know Tesla's been able to do that and have been able to stay ahead of the chip curve better than the average manufacturer. I bring Tesla up because when we're talking about profitability here, it was reported that Tesla earned 8 times more car than Toyota, but it's actually more accurate, around 5. As competition rises for Tesla and as manufacturers also figure out how to streamline their manufacturing, like Toyota just mentioned, they're going to go to an all-new EV platform starting with Lexus in 2026 in order to be somewhere close to Tesla in its profitability. So Tesla will continue to rake in the money in the coming years. Even though they just dropped prices, they will still continue to make more money per car, especially with full self-driving being about $15,000 or about $200 a month. All of the 7 major automakers lowered their annual production and sales forecast, citing chip shortages as well as shipping difficulties. That is quite strange because over at the Visual Capitalist, they have posted that shipping costs have plummeted since 21 and 2022. Here in 2023, it is absolutely way more affordable, and it looks like it's around beginning of 2021 prices. So shipping has been the cheapest it's been in a couple of years now. But just because the cost of shipping has gone down doesn't mean there could be more difficulties. But that seems to be the biggest difficulty, I would assume, is the cost of shipping. Nissan lowered its sales forecast by 300,000 units to 3.4 million, citing challenging business environments due to lockdowns in China, lower than expected demand, and continuing chip shortages in North America. Now we're going to look at some big Ultimate Energy right now since we're talking about Nissan. This morning after I dropped my kids off, I witnessed real big Ultimate Energy, missing front bumper, and one of the tail lights was out. You can't make this stuff up. But check this out. Okay, so if the demand is weakening, we should be able to see a reflection of this in some way or shape or form on cars.com. Are car prices dropping below MSRP? Here's that new refreshed SR. And look, MSRP is $30,000. It's about what, $1,500 off or so. Most of these are staying at MSRP. There's another one here, which is a $1,000 price drop, which is actually $2,000 below MSRP on this Altima. This one is below MSRP as well. This one is seeing price drops, and I just keep seeing more and more as I scroll down this list. So the market is not demanding vehicles anymore, at least at the high rate that Nissan's used to seeing. I mean, you could say largely due to new car interest, well, just any interest rates on new loans. I was also looking up Kia Niro because I have one in the driveway this week. And look, there are some here that are below the MSRP. And I'm only looking at the EX trim here because the SX Touring trim is a terrible buy in my opinion. But we are seeing price drops here on this fairly exclusive vehicle. They don't make a lot of these plug-in hybrids. Mitsubishi's also lowered its annual sales forecast to 866,000 units, down from 908,000, as an insufficient supply of parts is limiting production more than expected, and a global shortage of shipping vessels has hampered the replenishment of stock across markets. Shipping prices are plummeting, but shipping vessels seem to be in short supply. Very strange what's going on. I'm not a shipping economist by any means. Honda is hoping to sell 3.85 million units, which is 250,000 less than it planned in its announcement in November. Much of the decrease would be in China, where chip shortages combined with lasting effects from the pandemic and lockdowns are affecting operations. Honda's Fujimura is saying our high-priced vehicles sold in the US are equipped with specifications that require various semiconductors. So the North American market is affected more by the current situation compared to Asia, where sales are growing little by little year over year. Well, we know Honda really struggled in 2022 with just having the right parts. We know Lexus has been struggling as well year over year by not having the right amount of semiconductors as well. They're hoping that supplies will recover in the latter half of the year. We will see about that. Let's talk about the elephant in the room, and that is the appreciation of the yen, the Japanese currency. And this is not good for a lot of these Japanese manufacturers who sell most of their cars in other markets. The currency's value to the dollar continued to decline throughout 2022, which is a good thing for the Japanese automakers, because when they convert it to Japanese yen, it essentially is a multiplication factor of the money. But the yen exchange rate has been recovering to about 130 yen to the dollar, and at one point jumped to 129 yen and has since fallen to 133 yen per dollar. With the strong yen on its way, the auto industry's performance is basically heading downhill, said Takaki Nakanishi, CEO of Nakanishi Research Institute. Even though the chip crunch is easing, it's difficult to make up for the profit fall caused by the appreciating yen with sales. And in terms of the Chinese market, where they all sell, where all the Japanese automakers sell a good amount of cars, they expect the market size to be about the same for 2023, but the content will change. And the new energy vehicles, which are hybrids, plug-in hybrids, and electric vehicles, is continuing to grow. They're expecting that to be up to about 40% of the sales. And we know the Japanese automakers, especially when it comes to battery electric vehicles, are slow to offer them in any sort of meaningful volume. Nakanishi also thinks the Chinese market will normalize after March, but currently sees BYD emerging as the only winner. The ratio of EVs in the market will surely rise, so Japanese automakers need to make investments accordingly. So what does this mean to the North American buyer? It's too early to say, but we're already seeing trends of vehicles getting discounted off of MSRP for the first time in a while. It's probably been since right when the pandemic happened, or I should say 2020 in general, and maybe early 2021, since you've been able to get screaming deals on cars. And I'm not saying the deals right now are screaming, but they could get better and better as 2023 goes on. And it's possible the automakers could be quite blindsided by uncertain economic happenings here in North America and just the lack of buying power by the average consumer nowadays, especially with average car prices getting so high and the interest rates are accompanying them as well. But I'll see you guys down below. Thank you so much for watching. If you made it this far, hit the like button. That helps me out, and I'll catch you guys in the next video. Have a great day.